Welcome to Trading Lounge and the European indices for the 8th of June. We'll be covering the DAX and the FTSE. Starting with the DAX here on the weekly chart, we're looking at a wave 3 here with an A wave here, B wave here, and a C wave here for wave 4, and we're moving up into wave 5 here, and we'll be looking at wave 1 and 2 here, and moving up into wave 3 here, which will come in close to the tops there, and then wave 4 and then wave 5 moving higher. So let's go in and take a look. So on this daily chart here, we're looking at 5 waves up here for wave 1, ABC for 2, up for 1 and 2 and 3 and 4 and 5 here for the third wave. So we're in the third of the third here as such, and it's a perfect place to trade. We've been long in this from down here, building in trades all the way through here. So we've been in there for about 2,500 points. Let's move into the 4-hour chart and break that structure down a little bit further. So from this wave to here, we're looking at it like this here. From wave 2 to wave 3 here, we're looking for 5 waves, so 1 and 2 here, and then 5 waves in the third wave and the fourth wave and then the fifth wave here. So in this instance here, we've got 1 and 2 and 1 and 2 and 3 here. So we're looking for this wave 3 here. Let's just might move into the hourly chart here for that. But what we can expect just on the glance here is that this wave 4 here can pull back. This correction can pull back to the wave 4 of one previous degree here. So we'll leave it there. It's pretty wide, I know that, but it's a starting point. But we'll be tracking the actual structure that occurs within this space. So that's what we'll do there. I'll just tidy this up here from So the market will want to try and get to the 13,000, but it may not. But as I mentioned, the important thing here is that we're pulling back to, that will be the 38.2%. So we need to take that on board there. And then we're looking for the first high above the level. So here we're looking for a classic trading levels pattern here across this level while we're here. So that means that we have the arrival, the reaction, the first high above the level in 5 waves. May not go that high. We'll need to check that, just drawing out the pattern. And then we'll have a corrective wave here that can also pull back to the wave 4 of 1 lesser degree here before moving up into wave 5 of 3 there. So what you see here in this trend is not what you get next. You always get the opposite in the markets. In the real world, you see something and you buy it, and that's what you see and it's what you get. But in the markets, when you buy something, it's not actually what you get. You get the opposite, because if you're buying into a trend here, the next thing is going to be a correction. So it's just trends and corrections of different degrees, and we use Elliott and support and resistance to help us with that. So moving into the 1-hour chart here. So we've had long positions in here, 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 and here, and here. And the question is are we going to, we're facing a major level here, and we're also facing, these were in a trend, there's a beginning, a middle, and end. So from this wave 2 to this wave 3 here, the beginning is this one here where there's a series of 1s and 2s. Now, when we start going into this side of the trend, the last part of the trend here, we're going to be looking at wave 3s and 4s here. So this means that wave 4s can get rather sideways and complicated. And if you're trading CFDs, then you will be paying interest on these positions that we have down here. And it's a compound interest because it's compounded at each higher price each day. So it can get quite expensive. as you may know. So it's probably not a good idea to hold no need to hold all of these positions going through these structures here. We can move back in. As I mentioned, at this level here, we'll be looking for that classic trading levels pattern, and that will look a little bit like this here. So just imagine this is the 13,000 here. We'll be looking at the arrival now. Shortly, the corrective move here, then the first high above the level, and yeah, we'll probably trade that. We probably won't be involved in that because we want to be cool and peaceful, and we want to be planning to get our next trades in on the long side over here. We don't want to be, if we get in here, get out here, get back in over here, or get in over here, those sorts of things, then that just gives us a little bit of time off to think and, you know, just to, you know, bank that profit that we've got and just sit on that and be comfortable with that. And, you know, rather than just being in the market all the time as such. So this is, we'll either get this pattern here or we'll get a pattern where it doesn't drop below the level here. And that would be the variation on this pattern, which looks like this here. Right, either way, we'll still be fine because we will have any high, once we've got the first high in the above the level here, then we'll use that as a reference point to go along on. We can drop it down further, and we can drop it even down further and move in. But just generally speaking, that's the rule of thumb there. So we're going to take a percentage here. So you give that a bit of thought, see how much interest you're paying and all the rest of it, because the market will slow in this particular space here now. It will want to try to get there. Will it get there? I'm not quite sure. Probably will, but I'm just going to drop this under the level here, just in case you see weakness in other markets and so on. So let's just do this here for the exercise from wave 2 low here. Let's just take it to the 13,000. You can make the adjustments. So that's the 38.2% retracement level here. And it's just a starting point, you know. Sometimes we know that the market doesn't always pull back down to the levels, but we just got to start somewhere. So we'll be looking for simple A wave, B wave, and C wave here, and then up into 5 waves into the first high above the level, and then another corrective move here for wave 4, and then up from that point. So that's what we need to navigate. And, you know, normally the money that you make in the trend, you'll give back in the corrections here, but please don't let that happen. Just be mindful of that. And we don't know that high here yet. As such, and this may fall short here for this as well. I'm going to leave the stop out of the way here because I want to cater for this one here, and I want to build in on this side over here for that one. This correction here will be bigger than this one here, so what we'll try and do is try and find that top there and clear the rest of those orders out at that point, but we still want to build in on this side over here for this. So yeah, if you had a trading stop at the moment just for this little thing here, then you just really want to be under this level here, under that last low there for that. If you get stopped out, you get stopped out, and that's where you take your percentage of that particular point there. So we'll also just connect that up with that there. But otherwise, we're looking at that level there, holding on for that level. Let me just tune in here a little bit. It's okay. Excuse me. Right. I'll leave it at that. And I want to go to look at the FTSE now, which I'm just bringing in the same wave count here. So wave 1 here and 2 here, and then 1 and 2 here, 1 and 2 here. Nice strong third wave here. In this case, we're already at the level. This level here is 65. It's a medium level. And it's halfway between 5,000 and 8,000, yeah, we'll see that dance across here. So any trades that are in this market will need to be taken out at this level here now for that. So 1 and 2 and 1 and 2 and 1 and 2 here and 3 and 4 and going up into wave 5 here. So that's really going to, it's not going to go very far from here. So this is where you take profit at this particular point. Just go to the 15-minute chart there. So yeah, just take profit here at that level and just stand aside at this stage. And yes, it can push through and everything, but once again, we were looking for that classic trading levels pattern. So we're going to see the arrival might go a bit higher. We're going to see this correction here for wave 4, then up for wave 5, and then we're going to see this other correction here. So do we have wave 5 there? Yep. And that will be there like that. It's medium level 65, and that's all that really. So we could trade up there. It may not go that high as well. I shouldn't put it that high. Let me just, it's probably a bit lower. That was just assuming wave 4 comes back to the wave 4 of 1 lesser degree here. We'll see how that goes, but that's what we're looking at. Don't need that. But that's the arrival, the reaction, the first high above the level, and then an ABC pattern, and then we can move in over here to get this other next leg up here. Be very careful that wave 4s is where you lose the money. All right, so don't let it take it off you. Okay, alrighty. Thanks for tuning in.